Good morning, good morning, good morning. It is March the 26th. It is Wednesday, if I recall correctly. This is the Morning Blast, where myself and Mr. Michael Brown will jumpstart your trading day with an explosive daily market preview. But before we do, we will get the legals out the way. So, as usual, nothing discussed on this basis session constitutes trading or investment advice or infers any kind of endorsement by PIQ Global Limited, Trades PIQ or PIQ Suite, or indeed that of the hosts, which is myself, Mr. Ryan Paisley, and of course, Mr. Michael Brown. Happy Wednesday to you, Mr. Michael Brown.
Indeed. Good morning, Ryan. Good morning, everyone. Happy Wednesday. Happy Spring Statement Day as well.
Yes, it's not a budget.
No, it's not, despite what JP Morgan called it earlier in the week. But I tell you what, it is such a significant event that I've resorted to some handwritten notes on it this morning, which shows you how
Wow.
impactful
Wow.
it could prove to be.
And you know where you can watch it live?
No.
On PIQ's platform. You absolute shithouse. Right, that's the end of the show. See you all tomorrow.
That's not the end of the show. Shall we crack on?
Yeah, why not?
Because as soon as you said that, I did see someone leave.
Twats.
Indeed. Right. Anyway, before we scare anyone else away, good morning, everyone. In terms of financial markets yesterday, it was another positive day on Wall Street, with the S&P 500 closing higher by around 0.2%, and the Nasdaq adding about 0.5%. That does mark the S&P 500's first 3-day winning streak since the start of February. Although it is worth bearing in mind that move higher came on pretty dismal volumes once again, 27% below the 20-day average for the S&P 500. So although we're moving higher, you could well argue that participation in that rally is somewhat limited. Nevertheless, outside of the equity space, it was a relatively choppy day across the board. The dollar largely treading water around the 104 figure, with cables stuck in the mid 129s, and the euro sadly languishing around the 108 figure once more. Yeah, you've been given a bit of a reprieve for another
So
few
just
weeks, I think.
how close was I to being stopped out? Like 40 ticks?
47 pips.
Oh, 47. So you know exactly how close.
Yes. Yes.
Oh,
I
brilliant.
mean,
Don't call
it's
it a comeback.
engraved on my mind now.
Yeah, I bet. Oh,
We've
God.
we've been so close to both sides of this. We got down to a low of about 101.40, I think, and then we got to 109.50 odd as a high. I
So
mean,
for anyone that can't remember or doesn't care, so basically Michael's got when the euro dollar was trading about 105, myself and Michael had a bet. I went for parity and Michael went for 110, and we got quite a lumpy lunch on it. But by the time we get filled, we could be in our 60s. So we'll see
uh,
what.
yeah, I was going to say, I worried the Stafford might have closed by then. That's right. Anyway, in terms of fundamental catalysts from yesterday, I guess the big focus was on trade once again. Of course, as we continue to move, well, we're just a week away now from this Liberation Day on the 2nd of April. The reporting yesterday came from the FT, which was that apparently the president is considering what they were calling a two-step tariff regime. This would involve, firstly, the United States putting in place what they would term emergency tariffs, to put in place these reciprocal levies in the immediacy, and then using something called a Section 301 investigation to investigate their trading partners and impose tariffs in the longer run. Far from this being anything particularly game changing, my read on this is very much that it seems a kind of technical legislative measure to ensure that the tariffs that the United States impose have some form of solid legal grounding, which obviously would
Right.
then prevent anyone from, I mean, there's all of what Trump is trying to do seems to be getting challenged in various state and federal
Yes.
courts at the moment. So I think this is more a case of the Trump administration kind of wising up to that and saying, fine, we're going to put tariffs in place. We need to find a mechanism, a legal mechanism by which we can do do that rather than just signing an executive order and hoping for the best. So I think that was a bit of a classic case of not necessarily a misleading headline, but a headline that didn't quite give the full context around the reporting
Or
when you actually read into
almost
it.
like he's almost trying to future proof the process because of all like the hoops that they've had to jump through so far.
Yes, absolutely. Absolutely that. In terms of other bits and bobs on tariffs, yesterday, Bloomberg were reporting overnight that tariffs on copper could come considerably sooner than had been expected. I think we were expecting those in a number of months. Instead, Bloomberg reporting overnight that that may come within weeks. Of course, this goes back to the point that we were making, or you were making, I should say more accurately, around market participants increasingly front running the potential for those tariffs and the dislocation that we've subsequently seen between London and New York copper futures. You would expect that to continue to widen now that those tariffs may be closer than we expected. And lastly, on the issue of trade, because I'm sure this is getting as boring for anyone else as it is for me, excuse me, we did hear from President Trump. He was speaking at an event for US ambassadors yesterday evening. It was a ridiculous event, by the way. He had about 25 of these ambassadors in a room and went round the table one by one, basically getting them all to sort of pledge their loyalty to him and say how
Oh God.
he is the best president ever and Trump's strong leadership and all the rest of it. What was more interesting than all of that was Trump did actually let slip to the press that he has set the tariffs that he's going to put in place on April the
Oh,
2nd,
nice.
and that he thinks he's going to be very fair on those measures. Now, of course, Trump did not actually say what those tariffs are going to be, but I think this is an important development because although they are obviously subject to change, it
Yeah.
means that we have the potential for a cunning journalist or three to get a leak and find out
A
what those
cunning what?
tariffs
Oh,
are.
cunning journalist.
Yes,
Sorry.
yes, that's what I said. Um, so yeah, do bear in mind that if that is correct, and if those tariffs have indeed been set, and of course because it's Trump that said it, we need to take it with a bit of a pinch of salt. But if that is indeed the case, then there is the potential for the full list of tariffs, or at least some details around those tariffs to leak out before the 2nd of April deadline. A couple of other bits
Yes.
and bobs on the political front in the United States before I move on. Firstly, according to Bloomberg sources, a whole host of technology chief execs have been increasingly urging Trump to rethink the chip restrictions that the US are due to be putting in place. This is something called the AI diffusion rule, which will be coming into place from the 15th of May, and it restricts companies like Nvidia and Oracle and all of the others from the number of AI chips that can be exported to the majority of countries around the world. You will recall, actually, I think probably about 3 weeks ago now, Microsoft published an open letter that basically said it's a very noble aim, but by restricting sales of US chips, all you're going to do is get countries we don't particularly like to buy their chips from China instead. So we
Yeah.
will see how that one develops. And lastly, on the US political front, I regret to inform you that we're going to be doing the debt ceiling shenanigans all over again.
Oh,
Trump, according to Politico, is seeking to tie in the increase in the debt limit to the tax bill that he wants to get passed through Congress. I'm just going to say this now before anyone gets excited. What will happen is there will be a fuckload of political noise around this, as there always is, and then the debt ceiling will get raised. That's it. The
yes.
US will not default. The US will not shut down. Pigs won't start flying. None of that. It's purely just a whole load of
Well,
political
uh,
pantomime.
the thing is, even if the government does, I'm doing air quotes, but no one can see them. Shut down. If the government does shut down, but basically it means it pauses. So it's not even a shutdown; it's a pause. That is not the same as a default. So there's multiple things that come before a default, and a default will not happen.
No,
So just exactly that.
absolutely not. And if anyone out there says that it will, then just ignore them and never speak to them ever again.
Yes,
Um,
yeah, and throw shit at them. Sorry,
Yeah,
go on.
do that as well. A couple of other bits and bobs just from yesterday in terms of data. We did have the latest business climate survey from the IFO Institute out of Germany. That index rising to 86.7, bang in line with market expectations, up from the prior 85.2. We had a handful of data points out of the United States yesterday as well, all softer than expected. New home sales, the manufacturing figures from the Richmond Fed, and also the latest consumer confidence index from the conference board. That figure fell to 92.9, which is the lowest level since January of 2021. And last but by no means least, this a story via Reuters citing sources early yesterday, again in the tech space. Apparently, EU regulators, they have been looking into Apple and the fact that they limit, or they used to limit, the browsers that one could use on an iPhone. Apparently, they are now preparing to drop that case, so maybe a little bit less red tape for Apple to be dealing with. And actually, sorry,
Nice.
last but by no means least, just to cover off the inflation figures that we had out of the UK around about 90 minutes ago. Headline CPI rising by 2.8% on an annual basis in February, marginally cooler than the 3% consensus and prior. Core CPI also coming in softer at 3.5%, but underlying inflationary pressures are continuing to bubble away, with the services CPI metric holding steady at 5% on an annual basis.
Yeah.
In terms of the market reaction to that, we have seen a modest dovish repricing of Bank of England rate expectations, now about a 4 in 5 chance priced of a 25 basis point cut at the May meeting. But perhaps more importantly, given the context of the spring statement later, which we'll get onto in a short while, we have actually seen gilts advancing across the curve as well, with yields down by between 3 and 4 basis points this morning. And that's it from me for now.
And just as a reminder, where can you watch the spring statement?
PIQ suite.
Yes, indeed,
There we go.
indeed. Multiple feeds as well. I'll ping it up as well onto the Twitter sphere. But anyway, thank you for that, Mr. Michael Brown. Just a shout out to obviously Zach for the overnight news roundup, which I'll be reading some choice headlines from in a second. Make sure you check it out on our Substack and our pin tweet, and also to Cam, who'll be doing the crypto blast with me at 10:45. And of course Angie, but she won't be listening because I think it's too early for her over in the Midwest. For the grain market blast later on at 1:15 UK time. But anyway, back to the overnight news roundup. So macro news, Canada and tariffs. Well, Michael's already covered the tariffs on copper could be coming within weeks rather than months. That's obviously sent copper prices higher. That spread between New York and London, keep an eye on that one, as we saw before and as we mentioned last week, blowing out slightly. Canada's dollar
It's
is
all because of the
firming on.
roll, mate.
Oh yeah, no, exactly. Canada's dollar is firming on reports that it might get off lightly in the next week's reciprocal tariffs from President Trump. Congressional staff has told Canadian is subtly shifting. China outlook: Morgan Stanley raised China stock targets again. The Hang Seng to 25,800 and the HSCEI to 9,500, citing a better valuations and an improving earnings outlook. China plans to broaden its carbon trading market to steel, cement, and aluminium, adding approximately 1,500 firms to its emissions system. The PBOC advisors say that China has ample policy space for more stimulus this year, though global institutions warn on slowing LNG imports. Hong Kong central bank chief sees China's capital inflows as the biggest opportunity for the city's markets. Japanese data: corporate service inflation hit 3% in Feb, keeping alive BOJ hike expectations. Governor Ueda said the BOJ must raise rates if persistent food inflation broadens. He still views current levels as very high inflation as mostly temporary. Sorry, Japanese defense minister, or Japan's defense minister rather, to discuss possible increased spending in upcoming US talks. So that'd be another one for defense names. It's been a right good year for defense names so far. UK and Europe now. See, UK, as we just mentioned, UK inflation eased more than forecast in February, offering some slight consumer relief, although it's still going up. Chancellor Reeves is apparently going to boost defence spending by £2.2 billion, warning her budgets were hit by a changing world. Oh, that old chestnut. Yeah. It's not me, it's you. EU natural gas continues sliding on abundant supply. That's good news, especially as people look to refill the The storage, Poland to become first EU state to deploy post-pandemic funds for defence. So, as we all know, cash is fungible, and nothing is more fungible than a EU government pot. And it seems like now we're using COVID money for defence spending. But yeah, how work that one out. Australia. Consumer inflation moderated in February, partly due to lower electricity prices, supporting the case for more RBA cuts. And the ECB board member Panetta says policy should focus on inflation expectations. There's still work to hit the 2% target. Michael, I'm keen on your thoughts on this because my personal feeling is that inflation expectations aren't worth the paper they're written on.
Um, Sorry, I was just busy laughing about you being a dwarf with Adam Linton at News Squawk. It
Ah.
depends where the inflation expectations come from, I think. Consumer inflation expectations, absolute, complete, and utter waste of time. Market based inflation expectations, if you look at something like break evens or a five-year forward rate, marginally better, but still very much a kind of finger in the air type thing, I
Yeah,
think.
exactly. So I'm not too sure I really fancy ECB or central banks relying on those to, or as the focus should be on them. But anyway, and we'll come back to that slanderous comment you made just then. Let's debate. Geopolitics, Russia,
It's not
Ukraine,
slanderous if it's
drones.
true.
Wow, well, debatable. Russia, Ukraine, drones shot down over the Black Sea after a partial ceasefire. So another ceasefire that appears to not be a ceasefire. China's Inspur Group, among dozens of Chinese firms added to the US export restrictions list. Taiwan to spotlight World War II commemorations, highlighting the island's need to prepare for Beijing's threats. And the EU is investigating alleged Huawei lobbying improprieties as its fight for 5G at his fight for 5G restrictions. Now, finally, for me, just some corporate and market news. Nvidia and Chinese chips. China's NDRC advises domestic data centers to use strict chip standards. Nvidia's H20 chips may not meet requirements, threatening its China revenue. So potentially a bit of a downer for Nvidia there. Deal flow and corporate news now. AT&T in exclusives talks to buy Lumen's consumer fiber unit for $5.5 billion. Qualcomm escalates its legal battle versus ARM in Europe. Trendforce sees DRAM prices, including HBM, no idea what that means, answers on postcard, rising 3 to 8% in Q2 on AI demand. GameStop soared post-market on news it invested corporate cash into Bitcoin. I'm sure Cam will be talking about this later. If not, he will have to now. Throw him under the bus. Fidelity plans to launch its own stablecoin as US regulators finalize crypto frameworks. United Airlines technicians rejected a new contract per Teamsters Union, so potential strike situation over there. Foxconn to collaborate with Google on auto/AI cloud expansion. In speaking of that, automotive and AI, Alibaba and BMW to team up on AI for cars in China. BYD aims to double overseas sales to 800,000 cars in 2025 and may assemble locally to dodge tariffs. CATL, the battery giant, obtains $5 billion for Hong Kong listing approval. It's going for a Hong Kong listing approval to raise $5 billion. Will be the city's biggest IPO in years. Vivo, China's top phone maker, seeks 70% overseas revenue in 2 years. Energy and industry now, the Chinese oil giant, sees a 16.8% drop in 2024 net profit on falling oil prices and EV adoption. MFE reportedly to evaluate ProSieben takeover approach on Wednesday. And last couple of bits from me. Nintendo shares jump on Switch 2 console optimism. Grab is discussing a 2 billion loan for a potential go-to buyout. And finally, Paladin Energy, this is one for uranium and metals, withdrew its full year 2025 production guidance, sending shares plunging. So not radiating good news on that one.
Oh, bloody hell. I did wonder where you were going with that. That's
You always
worse than
know,
I
like
could have
if I'm
envisaged.
picking like a completely completely random stock or really random company. It's like there's something coming. There's something coming. But anyway,
Yeah,
that's it for me.
absolutely. Right, in terms of today, then, of course, we do have the spring statement here in the UK, which I'll get onto momentarily. But just to cover off everything else that's going on before that, at 12:30 today, we do get the latest durable goods orders data out of the United States. Orders expected to have declined by 1% in February compared to the 3.2% increase that we saw in January. We also have 5-year supply out of the States at 5 o'clock this evening. The 2-year auction yesterday stopped through by around 0.3 basis points. And notable central bank speakers today include the Fed's Musalem and Kashkari, as well as the ECB's Cipollone and Vilroy. Of course, for all of us here in the UK, though, focus will naturally fall on what the Chancellor, Rachel Reeves, has to say in the spring statement. Reeves will be up in the Commons as soon as Prime Minister's questions ends this lunchtime, so shortly after 12:30, with her remarks due to last between 25 minutes and half an hour. I think some context around the spring statement is important because, to be honest with you, today was never meant to be a major event. When Rachel Reeves became Chancellor last July, one of the first things she did was to commit to having one major fiscal event a year, and that would be held as the budget in the autumn. Instead, the spring statement would merely be a very, very short update, effectively to say whether or not the OBR still believe that their forecasts are accurate, if they've ever been accurate, and also as to whether the fiscal rules would continue to be met. However, that has not quite turned out to be the case, because since the budget last October, the UK economy has experienced at best anemic economic growth, and we've also seen a significant sell-off in fixed income, which has driven gilt yields higher across the curve. Consequently, after Rachel Reeves left herself around £9.9 billion worth of headroom against those fiscal rules back in October, that has all been eroded. And in fact, most estimates now point to Rachel Reeves being around £5 billion in the red and having a shortfall against those fiscal rules. As a result of that, we're looking at somewhere between 15 and 20 billion quid worth of measures in order to, quote unquote, balance the books. Now, in terms of those measures that we're expecting, it's important to firstly just call out that we're not expecting any changes to taxation. Sources reporting in pretty much all of the papers indicates that tax changes will be coming in the budget in the autumn, and just to depress everyone even more, they are basically an inevitability. Whether they come now, whether they come in October, tax hikes are sadly on the way. In terms of today, though, the measures to balance the books in the immediacy are going to come from spending cuts. And I think there are three main areas that the government will be targeting on this front. Firstly, there will be a significant cut to the welfare budget and various tweaks to government benefits to effectively ensure that the government is handing out less in terms of those benefits that are being claimed. Initial estimates pointed to these changes saving around £5 billion, but the Times reporting overnight that in fact those changes may actually only save £3.5 billion. So, dare I say, the statement is already on it looking a little bit ropey, and it hasn't even been delivered yet. In terms of
Yeah.
other measures that Rachel Reeves may deliver, there are likely to be significant spending cuts across all unprotected government departments. So that is basically everything outside of defence and healthcare. And those spending cuts are likely to, again, save around £5 billion in rough terms. Most of you will probably notice that that does not add up to £15 billion. So where's the remainder of it going to come from? Well, it's going to come from a blag, a hope and a prayer, because what the government are likely to do with whatever gap is left is sort of promise the OBR that after 2029-30 fiscal year, they'll deliver some spending cuts. They might even unfreeze freeze the income tax thresholds. They'll basically promise things that they know will never be delivered because that is after the next election, and that is how
Bit
the
bit like
government will make up the shortfall.
a bit like Michael on a first date.
Well, yeah. Well, I thought you were going to say me buying a pint, but that works as well. The issue with this is that although on paper doing that and saying, yes, okay, in 3 years' time we will make further adjustments, further spending cuts, further fiscal tightening, every man and his dog knows that that is never going to be delivered. So although the OBR may well say and sort of have to say in their forecast that the measures the government have outlined to us meet the fiscal rules, we kind of all know that that is not the case in reality. And I think that's a very, very dangerous game for a chancellor who has next to no credibility in the market's eye to be playing. Now, speaking of the OBR, if we get back to the 10 billion quid's worth of headroom that we had in October, that would still only be around a third of the pre-COVID average. We used to have the Treasury operating between sort of 30 and 40 billion quid's worth of headroom, but it's just clearly impossible to rebuild any more of a buffer at this moment in time. The OBR's forecasts are also likely to see a significant downgrade to the UK's economic growth profile. Back in October, the OBR reckoned the economy would grow by 2% this year and by 1.8% in 2026. I think you're probably looking at certainly the 2025 forecast being halved, and I would say the 2026 forecast is probably not far off that either. The important thing to bear in mind with the OBR's forecast, though, is again, they're already out of date. The OBR took their snapshot of financial market data right at the back end of January, start of February. In fact, it was the 10 working days prior to the 12th of February that they are using to base their forecasts on and to decide whether or not Rachel Reeves is meeting those fiscal rules. The problem is that gilt yields across the curve are now about 25 or 30 basis points higher than when the OBR computed that data. As a result, the fiscal rules again will be met by a sort of hook or crook, a bit of a blag, and based on an out-of-date market profile. So again, I think that is a bit of a headache for Reeves to be dealing with in the eyes of market participants. A couple of other things just to bear in mind. Focus for fixed income operators will naturally fall on the gilt issuance remit. Consensus has that between 310 and 315 billion quid. That will be up by about 20 billion on where it was last year. A little bit technical, but we're also expecting the DMO to continue to weight that issuance much more towards the front end of the curve and shorter dated gilts, very much in keeping with the trend over the last decade or so. In terms of market reaction, the thing I would pay very close attention to is whether we start to see gilts and the pound moving in opposite directions. If gilt yields move higher and the pound moves lower, that's a telltale sign that the market is losing faith in the government's fiscal stewardship. And last but by no means least, no matter what the government, Rachel Reeves, or whoever other spokesman you listen to on the media this afternoon may say, this is austerity in all but name. We are dealing with significant real-term spending cuts across government departments in the spring statement today, and as we just alluded to, tax hikes in the autumn are pretty much inevitable. As we discussed yesterday, the ideal thing to do would be to change the fiscal rules, to give a more of a longer-term focus, to allow greater investment in the UK economy. Sadly, when you are a chancellor with next to no credibility in the market's mind, that is not possible. So we remain stuck in this sort of doom loop of ever lower spending and ever greater taxation. Where that gets us is anyone's guess, but my personal guess would be that Rachel Reeves' days at this moment in time are very, very severely numbered indeed. And that is, on that optimistic note, all from me this morning. And I believe I've bored Ryan to sleep.
Sorry, I muted myself to do some typing, and I forgot to unmute myself.
Oh.
But I was just saying that, inversely, you have actually ended on some good news, because the sooner she's out the door, the better. But anyway,
well, I don't know. Maybe better the devil you know. Who the hell would replace her?
well, It's a low bar. Well, it's a low bar, right? But yeah,
It's
even
incredibly.
I can't get under that bar. Oh, stop it. Right, Mr. Michael Brown, thank you so much as always for a great morning blast. Listeners, thank you as always for tuning in. We really appreciate you, and we'll see you tomorrow. Where I no doubt Michael will be steam coming out of his ears after whatever Rachel says today
Oh
in
God,
Parliament. But yeah, see you tomorrow. Goodbye.
indeed. Bye for now.